So Bitcoin has reclaimed the short-term holder cost basis at around 114K after dropping to 105K just days ago. We've now been above this level for around 2 days in a row, and I'm expecting some consolidation around this zone, similar to what we saw during the past two pullbacks this cycle. In my opinion, we see consolidation through mid to late October, and then upward momentum kicks in near around the end of the month, which aligns with October's historical seasonality. So let's dive into the charts. So let's start with where we are right now. Bitcoin currently sits at around 114K, which is exactly where the short-term holder cost basis stands. We dropped from 126 down to 105K, a 15% correction that broke below this level initially, but we found support on an intraday level at around 105K, which is where the MVRV average stands, which is the average cost basis for everyone in Bitcoin on chain. And we've now reclaimed the short-term holder cost basis level. So we've been above it for 2 days in a row, and this is significant because historically, once we reclaim this level during bull markets, it tends to act as support again. So we saw this in 2017 and act as support throughout the entire bull market, and similarly now. And based on these patterns, I'm expecting some sort of consolidation style behavior around this 114K level. We could chop around, test it a few times. I don't expect a clean breakout immediately, even though that could happen. I'm expecting sort of the choppiness that we've seen this cycle. So the second half of October typically delivers its strongest returns, as we can see throughout history. In 2021, it was around October 20th where we saw most of the gains, and in prior cycles in 2017, we saw it around October 27th, I think it was. And so let me show you why I think this structure is still intact using one of the more important momentum indicators on the website, which is the ratio between short-term holders and long-term holders cost basis. So this is the ratio between short-term holders and long-term holders. It basically compares the average acquisition price of short-term holders, which is anyone who bought Bitcoin in the last 155 days, to long-term holders, anyone holding Bitcoin longer than 155 days. And you can see the orange line is the short-term holder cost basis, currently at around 114K like we talked about. And the green line is the long-term holder cost basis, which is sitting at around 37K. And the purple line at the bottom here is the ratio between them. And so this ratio basically shows the relative positioning between these two cohorts, you could call it, right? So when the ratio is rising, that typically means, or it does mean, that short-term holders are entering the market at increasingly higher prices, relative to long-term holders. And this is typical during bull markets. We've seen this occur. So as the ratio is rising, that means that the short-term holder cost basis is outweighing the long-term holder cost basis. And so right now, the ratio is still in a positive momentum territory, and we're still on an uptrend on this ratio since about 107K right here, it turned positive. And so looking at prior bull markets, 2017, for example, the ratio climbed throughout the entire run-up from the bottom to essentially the top when it flipped. During the 2021 crash, we saw this ratio sort of flip around on its tail at around 40K, I think it was. So it turned negative. If I turn off the smoothing, it turned negative around 40K. And then it subsequently turned back around a little bit, and we saw that all-time high, and then it shortly thereafter pulled back. And so then we consolidated for quite a while during the bear market. And then here's what's really important. So when the ratio of the long-term holder and short-term holder cost basis converge, so when these two lines get closer and closer together, that typically marks these accumulation events that we've seen throughout bear markets, right? So during 2018 to 2019, these two lines converged at around 4 to 6K, and then diverged at around 6K. And then as you go up, they diverge again and converge again, and so on and so forth. And so back in 2015, you can see the same thing happened as well. We converged at around $200 and then diverged at around $300, and that marked a pretty good accumulation zone. And you saw this in 2022 and in 2011 as well. And so this tells us we're obviously not at a cycle bottom right now. We're in a late stage bull market where new buyers are entering at much higher prices than long-term holders. And the fact that this ratio is still trending upwards tells me at least that the bull market is still intact. Short-term holders are entering at higher prices, long-term holders distributing. This is how Bitcoin cycles have worked, and in my opinion will continue to work. And if we see this ratio start to break down, so if short-term holders start falling rapidly towards long-term holders cost basis, so we can see this happens in 2021, where the short-term holders cost basis falls down, meaning they're starting to sell Bitcoin and not buy as much, whereas long-term holders are still accumulating, right? So if the short-term holder cost basis can start to go down, the long-term holder cost basis starts to go up, then that would mark sort of a shift, and then you would see this ratio start to go down, but we haven't seen that yet. And so another chart I want to mention today is called the sell side pressure, and this is something I added a couple weeks back. So lines in blue, in the color blue, show profit pressure being taken, people selling at gains. So this is based on the SOPR, the spend output profit ratio, but it's only looking at the profit versus the loss ratio. So it's taking just either component and rendering it on the chart here. And then in red, that shows loss pressure, so people selling at losses. And this shows us capitulation events pretty clearly. So during let me just turn off these two and just show you the short-term holder losses. And so during the drop to 105K, we saw this sort of trend up a little bit, but it wasn't nearly as much as the two prior consolidation events that we saw in the cycle. And similarly, we saw basically no losses from long-term holders during this dump. We saw a little bit of pressure during the pullback from around 73 to 50K, but basically nothing, right? We didn't see anything during this. We haven't seen anything during this as well. But if we look at it on a more macro perspective, in terms of long-term holders selling during losses, you see that typically during actual market cycle bottoms, this starts to tick up, right? So long-term holders, conviction sellers, or conviction buyers are capitulating at these events because that's the max pain, the max loss territories that long-term holders have historically experienced. And you can see that this marks pretty well-defined bear market territories, right? So we're not seeing that right now. Short-term holders capitulated briefly. Long-term holders haven't experienced any losses, basically. And so finally, let's talk about the fear and greed index. So yesterday, the fear and greed index actually hit about, I think it was 24 or something. If I zoom in here, yeah, it was 24. And so at 24, we're on extreme fear. The market's panicking. You know, we saw a flush out of leverage longs and whatnot. And so extreme readings during this cycle have presented, decent buying opportunities. In 2021, we hit extreme fear levels during the summer crash to 28K. We hit it briefly during smaller dips in September, right? And those were buying opportunities before the final, push to 69K. This cycle, we've seen, these extreme fear readings during the summer dip to 50K. That marked the bottom before we rallied to that 100K level. And so during bull markets, extreme readings aren't the time to panic, in my opinion. This is like the time to accumulate, right? So when we look at post-halving years, not bear market years, right? Like 2026 would hypothetically be if we follow the 4-year cycle, which I do think we will follow. Perhaps we see lengthening cycles by a month or two at most, in my opinion. And compared to bear markets, right? These extreme fear readings can persist for months, weeks, and a year, right? So from the cycle top to bottom, that can typically take a year to occur in prior cycles. So this isn't in bear markets, it's not a quick bottom signal, but in bull markets, it can be bought up pretty quickly and go up to higher levels, and Bitcoin can go up to higher levels subsequently. So we just hit extreme fear at 24 yesterday. Bitcoin dropped to 105. Everyone panicked. People who bought the dip, and now we're back at 114K. In my opinion, I do think 105K, that wick to 105K was the bottom. We flushed out the fear, leverage, and reclaimed the short-term holder cost basis. And on-chain data shows no long-term holder panic yet, at least. So this is confluence across these three metrics, at least, that are pointing to the same conclusion, right? This was a mid-cycle consolidation type event, not the start of a bear market, in my opinion. And so I'm still watching this 114K level closely, the short-term holder cost basis. As long as we hold above it, the structure is intact. And if we break below it and then start to get weekly closes below the MVRV mean at 100K, then we'll cross that bridge when it happens. But I don't think that we're in that territory yet. I'm also watching the ratio between short-term holders and long-term holder cost basis. If they start to converge, meaning long-term holders start to increase while short-term holders cost basis starts to decrease, if they do that, then it would signal we're entering a more longer consolidation or accumulation phase that we've seen historically. And so finally, based on historical seasonality, October's second half of the month tends to be the stronger half of the month, not the beginning. And so I'm expecting this sort of consolidation now and then momentum building towards the end of the month and into Q4. So all these charts are available for completely free on chartinspect.com. You can track these yourself in real time. If this analysis helped you understand where we're at in the cycle, subscribe for more on-chain updates and drop a comment on what you're watching most closely right now. And also wanted to mention that I'm going to be dropping some new charts relating to funding rates, open interest, and future trading, etc. So yeah, thanks for watching, and I'll see you guys in the next one. Bye.